Good morning, this is the latest market news. I'm Uliana. Asian stocks dropped on Friday, dragged down by concerns about the pace of global growth. The Nikkei 225 fell 1.1% at 153,002.60, while Australia's ASX 200 was down 1.6%. Stocks in Australia were an 8-month low again, with energy and mining stocks leading losses. Ongoing conflicts in the Middle East and in Ukraine added to fears that geopolitical events could slow global growth and dampen US recovery, while fears of an Ebola outbreak spreading to Europe and even into the US sent investors ditching equities and chasing safe haven gold and dollar positions. Overnight, US stocks stumbled on fears a softening European economy could spell trouble for US earnings down the road. The Dow 30 fell 1.97%. The S&P 500 index fell 2.07%, while the Nasdaq Composite Index fell 2.02%. Despite a less than desirable employment change in the Australian economy, the high-yielding currency found momentum lifting against the greenback on Thursday. Although unemployment rates remained steady at 6.1%, 29,700 jobs went missing in the labor force, driving a small dip as investors saw a buying opportunity. Overnight, surprisingly upbeat US unemployment claims changed the momentum in the markets, and the US dollar strength was seen across the board. The Australian dollar lost all of its daily gains and more, falling over 1% to open this morning buying 87.81 cents. Heading into the weekend, domestic and Chinese loan numbers today will be vital for direction. The lack of notable economic data today should not mean a lack of opportunities for traders. UK August trade balance 8:30 GMT. The trade deficit is expected to have dropped slightly for August to £9.6 billion from July's £10.2 billion. The UK's current account deficit and strong recovery have led to some worries that the much-dreaded first interest rate hike since country's recovery began is drawing near. Still, even if the deficit has not narrowed according to expectations, we find it doubtful that investors would begin to speculate that a rate hike has become more probable, as the weak Eurozone outlook is imposing constraints on economic prospects in the UK. It was the latest market news provided by ICO FX. Goodbye.